Hello, ladies and gentlemen. Welcome to the channel. And tonight we are going to talk about trading, market makers, and how does the price actually move. So first things first, what is trading? Trading is basically exchange of hands or exchange of contracts, which basically means if someone has to buy, someone has to sell. And if someone has to sell, someone has to buy. That's the basic meaning of trading. Okay. Now, who are market makers? Why are they even in this game? Market maker is a person who goes against you. He's a liquidity provider. So basically, it means that if someone has to buy, someone has to sell, right? If you have to buy, someone has to sell. And if you have to sell, someone has to buy. That someone basically is the market maker, right? If you have to buy, he will sell to you. And if you have to sell, he will buy from you. Now the question is, if that's the thing, how will he earn? How does he's earning money? How is he earning money? First thing is he's earning by something called as the market maker's spread. It is like the gap between the bid and the ask. Like if you ask for $1, he will give you sell you at like 1.12 or something. So he gets a smaller percentage profit in it. But the question is like, if he's doing it in so large a scale, he's like putting in his billions of dollars of money. Why would he settle down on pennies? The answer is because he's providing the liquidity. He can easily manipulate the market, and that's what we're going to talk about in this channel a lot. How does the market maker manipulate, and what are his ways of manipulation? How can you exploit it to actually make money? And how, like this is the reason the market is manipulated. That's the reason why 95% of the people lose in this game, man. If you understand how do they manipulate, you can exploit the knowledge and earn from it. That's where I come into the play. I will teach you how to exploit the market so you can actually understand what the meaning of market is and how does the actually it moves, man. See the price. If you search on the internet, people will tell you that the price moves because of the buyers and sellers, because of the demand and supply. If there's a demand, the price will rise. If there's a supply, then the price will drop. But who the fuck is the demand and supply, my guy? Who the fuck is creating it? And what the fuck does it even mean, man? The concept says, the book concept says, if there's demand, the price will rise, and if there's a supply, the price will drop. That's the thing, right? But is it actually the meaning? Is it? And if that's the meaning, and if the price moves, because say the people say that if you buy, that means the shares in the market decrease it. That's why the price rises. And if a big player sells, that means there are lots of shares or lots of pairs or lots of contracts basically in the market. That's why the price drops. Is that the actual reason? Because if that's the actual reason, then this big green candle or these big green candles should have more volume than these small candles, right? Because that's how it is, right? Big candles means big volume, right? Big volume present in it. More people are selling, more volume is it, like, right? But then why does it show on the volume profile that the small candles have more volume than these green candles? Why is it? This is because you have been taught wrong. There's nothing called as demand or supply. Market maker has billions and billions of dollars of money, my guy. He doesn't need to create demand or supply bullshit crap. It's all bullshit. He can literally do anything he wants in the market. He can literally just buy at the highest price possible and still survive even if the market drops to like $1 or some shit, man. He can still survive. He has that much of money. He doesn't care. Do you understand? Price actually moves to hit the orders and to liquidate trader. These are the two basic reasons why the price moves. Hit the orders and to liquidate traders. Because that's the game. Market maker pushes the price higher. But look, okay, I'll give you a basic example of how the market maker works. Let's imagine the price is consolidating in this region, and this is a low. Imagine this is a low, okay? This is a low. Imagine this is a low. So basically what happens is if it's a low, People expect that prices drop. The people are generally shorting. Majority of the people are shorting. So what market maker does is he traps all those shorts, reverses the price, and as the price reverses, people think that it's a reversal has happened in the market. That's where the people try to buy. Come on, that's where the buy comes in play, right? People start buying. That's where the price starts consolidating. And this consolidating causes accumulation of orders. And after the accumulation of orders is done, market maker pushes the price to the downside and liquidates all those traders. That's the game. And why would you buy after this push? Because my guy, you have been taught like that. You have been taught this is, what is this? This is a channel or some shit. If it breaks, you buy. That's what you have been taught all over the channel or all over the YouTube or all over the books. I don't know what to say. Which is wrong. And if you think I'm lying, just check the price action going on right now, man. Just check out the price action. It's fucking like that. We were at the downtrend from a long time. Market has reversed 100 times, but they are still trapping the traders. Everyone at this time was talking about Bitcoin to 20K, Bitcoin to 10K. So majority of the people are just going short. And if they are going short, who the fuck is buying their short? Mr. Market Maker. He's buying the short and making his long, accumulating all the shorts. So where is the shorts liquidity? The price should go higher. If the price goes higher, the shorts who are here, they get liquidated. Because people play on leverage, my guy. People play on leverage because they want more money. They want easy money. People see that there are hundreds of people playing on leverage and earning lots of millions of dollars and all bullshit crap. So they play on leverage and they lose money. Now look at here. We were going straight from a long time. Market maker pushes the price higher. Start is the trap liquidity. And guess what? Not much of a people are interested at this price. Not much of people are buying. Because you can clearly see that. Come on. Not much of an interest here. Not much of an interest. Not much of a people are buying yet. So what does he do? He pushes the price again higher. And as he pushes the price, he taps the 800. People go long here. Lots of institutional traders go long here. Trap their orders. And then start liquidating. No, not liquidating, basically accumulating the orders for a long time. It's an hour time frame. And then one day, all of a sudden, top and rise, drop the market. And now if you take the volume profile of this move, there's so much of liquidity. There's so much volume at this range, my guy. At this level. And if you check how much it has dropped, basically, if you take completely, it's spiky, 7% down. You know what that means? That if anyone is on, even if anyone is playing on 13x leverage, he will get liquidated. And if he is above than 30, he's 100% liquidated. People play on 100x, 50x, 20x, my guy. 20x is default. 20x is the default setting of Binance, my guy. This is the business of market maker. If you had to win in this game, this was a perfect trade. Market maker was pushing high, everyone was going long, At that time, I actually told my friends and people who were watching at the time to our channel, I said them there would be a stop on of this day, 1 June, I messaged them. There would be a stop on. This would be the range where we can see a stop on. So if you see price going in this region, it's time to go short and holding your trade because it will drop. If not from here, it will go to the 800 maximum and then it will be dropping. And guess what happened? Market squeezed the orders and dropped the market to the downside. It was an easy 200% profit. Easy. These were the levels of target profit. Now, I know I sound very weird because the concept which I'm telling you is like nowhere and so different. That accumulating of orders, hitting the orders, liquidating. But this is the game, my guy. This is the business model. You need to understand. This is the business model. Market maker is here to make money, not to lose money. He has billions of dollars of money. You have, how much do you have? You have pennies in front of him. This model is made. Why do 95% of people lose in this game? Because this game is designed to lose unless and until you understand about the market maker and how their ways are, so you can manipulate those ways and exploit it to execute your trade and make money, actually make money. That's how it is. Now, a lot of people will think that who am I and what am I talking about? How is it possible? The market is fair. It's demand and supply. It's written in the books. My guy, it's not. First things first. And secondly, I have an image of like it's like a couple months ago image, like old image of Binance. And if you see here, it's a free charge, like it's a free schedule. If you're VIP zero level, which is like your trading volume is below this, you have to pay that much bullshit. Like it's just the charges. But when you look here, trading 50 BTC or more, bespoke for VIP clients. Do you know what that means? This means the VIP clients get special services. These VIP guys are the rich people, okay? These are the rich people, but not much rich. I mean, decent rich. This is a decent rich. But this VIP 9 or VIP 8, if that's your volume, my guy, 8,000 BTC, 15, it's not only 15,000, it's 150,000 BTC or more, my guy. That's in billions. Do you understand? If someone has that much of a trading volume, he is the market maker. He has the information. He has so much of information, I cannot even tell you. They have devices. They have systems. They literally know where your orders are, where your stop losses are, where your target profits are. That's how they manipulate the price. There is a lot to learn about them and how to exploit what do they know or how they work. And that's our journey. That is the journey. Join me in the journey and I will teach you how it is. But remember, market maker is there. And if it's not, then how is it possible that it always hits your stop and after that the market reverses? Always there is a spike hitting your stop and then moving. It's the liquidity hunt, my guy. It's the liquidity hunt. Believe me or not, market maker is there and he's the liquidity provider. And I'm going to teach you how are his ways and how does he manipulate the price so you can understand it and exploit the system to make money. And that's the actual reason you are here. Thank you. Peace.